Recently, the value of cryptocurrencies continued their downward trend, with Bitcoin, BTC, dropping below $33,000 for the first time in approximately 12 months. The pricing changes follow those of a comparable nature that occurred just 1 month earlier. The cryptocurrency market appears to be collapsing, or at the very least going through a significant correction. Ethereum, ETH, and Cardano, ADA, also tumbled, adding to the downward momentum. Given the old investment advice, buy the dip, investors may be looking for a piece of the volatile cryptocurrency market in the hopes that this is a temporary downturn rather than a long-term bear market. If you've been thinking that now is the right moment to acquire cryptocurrencies, here are some opinions from industry professionals and some buying advice if you're new to the space. Disclaimer: this is not financial advice, this video is for educational purposes. Welcome to Crypto News. Like and subscribe to this channel and hit the bell button to get notified of all the latest updates. What does it mean to buy the dip? The act of purchasing an asset after its price has declined is referred to as buying the dip. The consensus among market participants is that the newly reduced price constitutes a good deal because the dip is simply a temporary hiccup, and it is anticipated that the value of the asset will eventually recover and rise. Understanding and purchasing the dips. When the price of an asset has dropped in the near term, investors and traders frequently hear the expression, buy the dip. Some traders and investors consider this to be a profitable opportunity to make a purchase or to increase the size of an existing investment. The idea of buying lower prices, sometimes known as dips, originates from the theory of price waves. When an investor purchases an asset after it has fallen in value, they do so at a more affordable price in the expectation of making a return if the market recovers. Buying the dip can be done in a variety of circumstances, each of which presents its own unique challenges and opportunities for financial gain. Others will use the expression when there is not currently a secular uptrend but they have the expectation that there will be one in the future. As a result, they wait for the price to drop before making a purchase so that they can make a profit off of any potential future price increases. If an investor is already long and buys on the dips, they are said to be averaging down. On the other hand, dip buying is seen to be adding to a loser if there is no subsequent upturn in the price of the asset. Constraints imposed when buying the dip. Buying the dips is a trading strategy, and trading methods in general do not guarantee results. A decline in the price of an asset can occur for a variety of reasons. Even when the price is currently lower than it was in the past, this does not always indicate that the item represents good value. The difficulty is that the average investor has very little capacity to differentiate between a momentary decline in price and a warning signal that prices are likely to go considerably lower. Even if there is unrecognized intrinsic value, buying more shares for the same price may not be a good idea. The strategy of averaging down is seen as a formula for catastrophe by those who are opposed to it, but its proponents consider it a cost-effective method for the acquisition of wealth. A drop in the price of a stock from $10 to $8 could present a profitable buying opportunity, but there's always a risk. There are a variety of plausible explanations for the stock's decline, including a shift in profitability, bleak projections for future development, a change in management, weak economic conditions, the termination of a contract, and other factors. It's possible that it will keep going down, maybe all the way to zero if things get bad enough. The crash of cryptography. It's possible that a lot of crypto investors believed that the 12th of May was the best opportunity to buy the dip. Back then, the price of Bitcoin had dropped all the way down to $28,000 from its previous high of $40,000. However, if you bought at $28,000, you would be down 30% on your investment today because Bitcoin's price is barely above $20,000. All of this raises an important question: should investors buy the dip if there is another crash in the crypto market in 2022? Why is the cryptocurrency industry going through another bear market in June of 2022? The price of UST not being tied to the dollar may have contributed to the first cryptocurrency drop, but macroeconomic factors are the main cause of the second cryptocurrency crisis. According to a recent survey, the Consumer Price Index, CPI, pegged inflation in May at 8.6%. This caused panic throughout all markets, as seen by a 900-point drop in the Dow Jones Industrial Average and the beginning of a bear market for the S&P 500. Inflation is currently at its highest level since 1981, contributing to the Nasdaq Composite's 4.68% decline. On June 13, 2018, the price of Bitcoin dropped from $27,000 and reached a new low of $22,000. The lending and staking network Celsius froze more than $11 billion in assets on Monday as a knock-on effect of dropping cryptocurrency prices. The most popular cryptocurrency trading platform in the United States announced that it would be laying off 18% of its full-time employees. The cryptocurrency market is falling again in June 2022 because of bad news about cryptocurrencies and bad market conditions. At the present price of Bitcoin, do you think it's a good idea to purchase the dip? There is some evidence that trading indicators are trending in Bitcoin's favor. The Relative Strength Index, RSI, for Bitcoin as measured over the past 14 weeks is currently sitting at 26. This is the lowest the RSI has been since at least 2018, which implies that Bitcoin is currently oversold. Bitcoin's price has dropped below its 200-week simple moving average, which is currently sitting at $22,350. Both factors point to the fact that now may be a good time to buy Bitcoin. However, it is difficult to determine where the bottom of the Bitcoin market is. The Federal Reserve of the United States held a meeting on the 15th of June. It was anticipated that there would be subsequent increases in the interest rate. In the short term, these could cause the cryptocurrency market to be more volatile, but in the long term, they could help to keep inflation under control and restore some stability to the market. In June of 2022, what additional cryptocurrencies do you recommend purchasing? The best chance for tokens to survive a crash in the cryptocurrency market like the one we are seeing in June is if they are backed by strong systems. At the beginning of May, Terra Luna was one of the top 10 cryptocurrencies by market capitalization. The token's value has now dropped to $0.00005719, a decrease of 99.99% from its previous price of over $80 in May. After being depegged from its original price of $1, the algorithmic stable coin known as UST currently has a value of $0.007334. These coins clearly lacked a solid foundation, so which cryptocurrencies should be considered for purchase in June of 2022? One of the cryptocurrencies that has thrived despite the recent market turmoil is the stable coin known as BUSD. BUSD broke into the top 10 of the cryptocurrency rankings and is now sitting in 6th place in terms of market capitalization. BUSD is the only stable coin that is backed by US banks, it has regular monthly audits, it is the native stable coin of Binance, which is the largest cryptocurrency exchange in the world based on market capitalization. To date, investors have been rewarded with more than $37 million, and holders of Evergrow coin can earn BUSD rewards for any buy or sell order involving EGC. This shows that investors can still get passive income even though the value of cryptocurrencies has been going down recently. Evergrow coin could be a good investment for you in June 2022 if you don't know how to day trade, short trade, or pick up other cryptocurrencies that are rising quickly to make a quick profit. The information provided in this video is solely the author's opinion and not investment advice, it is provided for educational purposes only. By using this, you agree that the information does not constitute any investment or financial instructions. Do your own research and reach out to financial advisors before making any investment decisions. I hope this video helped you understand dips in the market, when to buy, and the risks involved. Please like and subscribe to our channel and hit the bell button to be notified of future videos. Thanks for watching.